Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 12th, 2025, and we're diving into the fiscal 2026 first quarter earnings report of Hooker Furnishings, a global leader in home furnishings. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Hooker Furnishings has been a staple in the home furnishings industry for over a century, and their latest report provides some interesting insights into their current performance and strategic direction.
Revenue and profitability overview. Let's start with the top line. Hooker Furnishings reported net sales of $85.3 million for the first quarter, which is an 8.8% decrease compared to the same period last year. Despite this, the company managed to lower its operating loss by 31% to $3.6 million. John, can you elaborate on these figures?
Absolutely. The decrease in net sales was primarily driven by a double-digit decline at their Home Meridian segment, which faced challenges due to import tariffs. However, the company has been effective in reducing operating expenses by $2.2 million, which helped narrow the operating loss. The net loss also improved to $3.1 million, or 29 cents per share, better than the previous year's $4.1 million loss.
It's interesting to note that the adjusted EPS came in at 9.29 cents, missing the forecast of 9.16 cents by analysts. What does this indicate about the company's financial health?
While the EPS miss is notable, it's important to consider the broader context. The company is in the midst of significant cost-saving initiatives, which are expected to yield long-term benefits. The immediate impact on EPS might be negative, but the strategic moves are aimed at stabilizing and eventually improving profitability.
Operational efficiencies and future outlook. John, Hooker Furnishings has been focusing on operational efficiencies. They reported a gross margin improvement of 180 basis points and have opened a new warehouse in Vietnam. How do these initiatives position the company for the future?
The gross margin improvement is a positive sign, indicating better cost management and pricing strategies. The new Vietnam warehouse is a strategic move to enhance supply chain efficiency, reducing lead times significantly. These initiatives are part of a broader cost reduction strategy aimed at achieving $25 million in annualized savings by fiscal 2027, which should strengthen their financial position and competitiveness.
That's a substantial target. How realistic is it for Hooker Furnishings to achieve these savings?
Given their track record and the phased approach they're taking, it's quite feasible. They've already made significant progress with initial cost reductions and are now focusing on logistics and operations consolidation. If they continue to execute well, these savings will not only improve profitability, but also provide a buffer against market volatility.
Segment performance and strategic initiatives. Let's delve into the segment performance. Hooker Branded saw a slight increase in sales, while Home Meridian and Domestic Upholstery faced declines. What are the key takeaways here?
Hooker Branded sales increase, albeit modest, is encouraging and reflects stable demand for their legacy brands. Home Meridian's significant sales drop is concerning, largely due to the loss of a major customer and tariff-related challenges. However, Domestic Upholstery's performance was bolstered by a strong showing in outdoor furnishings, which helped offset some of the indoor demand decline.
And what about their strategic initiatives, like the Living Your Way program and the Margaritaville licensing?
These initiatives are crucial for driving future growth. The Living Your Way program focuses on customizable, lifestyle-oriented solutions, which align well with current consumer trends. The Margaritaville licensing is expected to expand their market reach and enhance brand appeal. Both initiatives demonstrate Hooker's commitment to innovation and adapting to consumer preferences.
Management commentary and market challenges. John, CEO Jeremy Hoff provided some insights into the company's strategic direction and market challenges. Can you summarize his key points?
Certainly. CEO Jeremy Hoff emphasized the company's focus on stabilizing operations, improving sales, and maintaining strong gross margins through cost-saving programs. He acknowledged the challenging market environment, characterized by high mortgage rates and low consumer confidence, which are impacting the home furnishings industry. Despite these headwinds, Hoff is optimistic about the company's strategic progress and their ability to adapt to market realities.
How is the company planning to navigate these challenges?
They're prioritizing cost optimization and operational excellence, which are critical in a tough market. By focusing on product innovation and strategic initiatives, Hooker Furnishings aims to capitalize on emerging opportunities as conditions improve, ultimately driving long-term shareholder value.
Key takeaways. As we wrap up, Hooker Furnishings is clearly navigating a challenging environment with strategic initiatives aimed at long-term growth. Despite a miss on EPS expectations, their focus on cost savings and operational efficiencies is promising. John, any final thoughts on their investment prospects?
Hooker Furnishings is making the right moves to stabilize and position itself for future growth. While there are short-term challenges, their strategic initiatives and cost-saving measures are likely to enhance profitability and shareholder value in the long run. Investors should keep an eye on their execution and market conditions.
And thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Hooker Furnishings' performance in the comments below.